All right. Welcome, everyone. As you're coming in, we do have you on mute, and we will allow you to unmute yourselves when it comes time for questions. But until then, I am very excited to get a chance to introduce you all to Maxine Minter. Maxine and I met probably like 4 or 5 years ago at this stage. And I knew she was super special because one, she came back from the US during COVID, and I feel like I had a little bit of a part in her staying. So I'm going to take that claim to fame. But we met through both Airtree Explorers and as StartMate mentors. And I was like, who is this new cool kid on the block? Let's be friends. So I kind of forced her to stay, but all for good reason, because she is now the first solo female GP running a fund in Australia. And importantly, which is why you're all here today, she is opening up her investments to a community syndicate so that some of you can invest alongside. Maxine is one of my favorite investors. Every time we have a conversation, which luckily for me is actually quite often, I get to learn something. Sometimes it's morbid, sometimes it's very exciting. So I'm really excited for what I'm going to get to learn today. We're going to be talking a little bit about her investing, and most importantly, how you can access some of the investments that she's making. So Maxine, after my fun little introduction there, what haven't I told people about? Like, tell us about your background.
Yeah, well, first of all, thanks so much for having me on, and great to see some friendly faces, some new faces. I think a couple of people I've connected with on LinkedIn, but haven't yet had a chance to meet. So hello, everyone, and thanks so much for giving us your Thursday morning. So background, I am a recovering corporate lawyer and chronic side hustler. I have built little companies alongside of pretty much every stage of my career to date, and then got to a point when I was about 26, 27, where I realized, I wanted to make it my main squeeze, not my side squeeze. And so built a company, and that was my real kind of first step into venture-backed startup building. I did that by moving over to the US and going to Stanford as a very expensive cover story to start a company in the Bay Area. Although easier to get into Stanford than it is to get a green card. So built a company in the Bay Area. And while I was at Stanford, and then did the kind of venture-back scale route in the Bay Area, but most relevantly for this call, also started angel investing as I was operating. Actually originally started doing that because I really struggled to find people who I identified with to be on my cap table. And so that plus getting the enormous opportunity to see a couple of friends start their angel investing journey at the same time, we all started angel investing together, and that was my kind of on-ramp back in late 2017, early 2018. And then from there was angel investing, kind of learned how to angel invest in the Bay Area, and only really started my journey angel investing back in Australia in late 2019. I was just blown away by the quality of founders in this ecosystem. And so when I came back in 2020 and Cheryl single-handedly forced me to stay in the country, I kept doubling down there, kind of kept investing in Australia, and really started to explore this opportunity between the cross-border strategy in Australia to the US. My observation was we have equally quality talent, founder ideas, things that they're building coming out of Australia, but just not the resource environment that they have in the Bay Area. And so the opportunity we're chasing for the fund, and hopefully bringing the rest of you along for as well, is that cross-border strategy, backing the next generation of pre-seed companies in Australia and helping them accelerate internationally from day one. And we can dive into kind of some of the ways that we think that works and levers that we'll pull to try and do that.
And like, what is it like? What is the reason for you that you're doing this? Like, what's driving you in the angel investing early stage space?
I mean, there's so many factors. I wouldn't say it's single factorial. One of the reasons I'm doing it is that it is, I think, a key lever to driving the success of the overall ecosystem. So something that I've experienced in the Bay is there's this deep bench of operator angels that are doing, 5 to 25K checks investing in spaces that they really know or places that they can be really helpful. And it's very, very common that folks do that. We don't have that deep bench in Australia. And I think one of the challenges is that the entry price to be an angel investor, first of all, was misunderstood. I think a lot of people thought it was like hundreds, not thousands. And then also, I think a lot of people are kind of struggling to scale their sourcing, might meet the right companies, kind of see how other people are doing it. It's just like not normalized to the same level. So one of them is I really want to see that deep bench of operator angels, because our key driver is to build the pre-seed stage, the support around pre-seed and the companies at pre-seed. And a big part of that is the angel community that kind of gets behind them and are those early believers. So that's one. Two is it's really interesting, right? Like pre-seed is the most human stage. It's where there isn't a lot of data to go on kind of institutional structures. In fact, I'm looking at an investment at the moment and the company doesn't exist until we make the investment. It doesn't, the entity itself is being incorporated as part of the transaction. So, it's really at a very human stage. So from a personal front, I really love that, working at the very human level and kind of helping them scale. I think there's also a more kind of impact macro element here in that currently it's pretty homogenous, the group of people who are deploying capital into the Australian ecosystem. And I would love to contribute to a broadening of the viewpoints that are deploying capital into the Australian ecosystem. And I think a big part of that is access, transaction cost, right? Like how expensive it is for you to participate. And then also the building of confidence and, doing it alongside a community of folks. I'm really hoping that this community syndicate also bounces off each other, learns from each other, is a place that folks can get those early reps, angel investing, and kind of, we can open source what we're doing, how we're doing it, and the companies that we're investing into. So just for a little context for this group, the plan for this syndicate is where we get allocation at pre-seed, we will make that allocation available to our LPs on a first right refusal basis. And then if there's additional allocation on top of that, we'll make it available to this community to double down and kind of lean in at pre-seed alongside us. We will, and for those that haven't had a syndicate or used a syndicate on Aussie Angels before, we will give a deal note, which will be a summary of our diligence on the company. So you have that to build your diligence on top of. So that's at pre-seed. And then after us, because we are a pre-seed only fund, we don't do follow-on. We don't invest again out of the fund, but often we get either pro rata or we are so valuable over the course of the time that we're working at pre-seed that we get additional allocation at seed and Series A. And so to the extent that we get that allocation, we also will make this available to our LPs first on a first right refusal basis, and then anything left over will be made available to this community. So ideally, you will get to invest alongside us and alongside our LPs at pre-seed, seed, and Series A.
Amazing. You skipped ahead like 6 questions, but I love it.
Sorry.
That's okay. One of the things that I think is really interesting is that like when I started investing, I was like, yeah, I'm a pre-seed investor. And like many of the investors, I think in the space that I operate in would say like, yeah, we invest pre-seed. But really, I feel like Australia maybe has like this kind of misunderstanding about like what true pre-seed is. And I'd love for you to dive a bit deeper into like, what do you consider true pre-seed? What does that mean for you? And why do you think that that's such an exciting space to invest in?
Right. Yes. I appreciate you giving me this soapbox because I'm so jazzed to just like rant for a moment. So
I'll just like unpin myself. Go.
My observation about the way that we think about pre-seed in Australia is we anchor heavily on like round size and round valuation. And we use round size and round valuation to say like this is pre-seed or this is not pre-seed. The challenge with that is you have some founders who are raising pre-seed with the product in market, early traction, and like in some cases 5 to 6 figures of revenue. And then you have some market who are raising seed with a deck and an idea. I think the definition of pre-seed and the kind of US version of pre-seed that I have grown up with is actually a stage risk perspective. So thinking about where is the company at in its risk or its de-risking journey, and therefore where are we pricing and where are we investing? So when we think about pre-seed, we are investing the stage, that is everything up to the early signs of product market traction, the level at which seed, in my terminology, starts to invest, which is, oh, you've got some green shoots that might actually be working here. Let's pour some more fuel on the fire and see if we can get you to full product market fit. And then Series A is about the third stage of de-risking, which is, okay, cool, you have product market fit, but can you build a company around this product market fit? And then the growth stages are everything from building that company through to scaling that company, expanding product lines, et cetera, et cetera. So when I think about pre-seed, what we focus on are those kind of from nothing through to those early signs of product market fit, so that you are a clear, great opportunity to invest in at seed. So tactically, what that means for our pre-seed deals is they are everything from kind of pure idea stage to early hacky beta, but no revenue, and some kind of very early customers. We also do some, interestingly, post-revenue pre-product deals at pre-seed. So what that is there are services companies where they have earned an insight in relation to their customer base or where they think their customer base is going to be going, and they're wanting to build the product around that. Interestingly, Australia has a pretty deep history of great companies being built out of this space. That was the journey for Linktree, that was the journey for Mr. Yum, that was the journey for Employment Hero. And so we do a few in that space as well. But think of pre-seed as anything prior to those like early green shoots of like, oh, there might actually be something that works here.
Amazing. And you said that you don't do follow-ons. What does that mean for the fund? But also, like, why is that super cool for syndicate investors?
Yeah, so we don't do follow-on in that, we don't deploy capital as a secondary like seed or Series A. The reason we do that is we are completely focused on supporting the founders that we work for, helping them survive and thrive through that pre-seed stage. So from nothing through to those early product market traction indications. It comes from a philosophy from my perspective, in that when I was at that stage, having a fund kind of all in there helping me de-risk that stage was so valuable. And as a secondary piece, they didn't have a incentive to be kind of taking an option, just watching how I do, getting ready to double down. I also, don't want to be a signaling risk for the founders that we work for, that we double down or don't double down. So we focus just on this stage and just supporting them at this stage. There are so many wonderful funds that do excellent work at seed and further, or like multi-stage funds. So for us, what we're really focused on is just that pre-seed stage. What that means for both our LPs and this syndicate is that to the extent that we get follow-on opportunities, we don't take them out of the fund. So the full amount of that allocation is made available to our LPs and then to this syndicate to the extent that there is overflow. And to the extent that we are useful from seed to Series A and we get that same opportunity at Series A, we also will do that.
And you've talked so much about like being like helpful and operator angels. Like I would call you an operator angel / GP. Like tell us a bit more about how are you helpful?
Yeah, so I think it's helpful to provide a little context here on Co Ventures for folks on this call that don't have any context on Co Ventures. So as I mentioned, we are a pre-seed only fund. What we are focused on doing is, as I said, de-risking and supporting the companies that we work for to increase the probability of surviving and thriving through, nothing through to those early traction moments. One of the observations I've had and an insight from first round, which was the fund that backed my last venture-backed company, was that to be really helpful at this stage, you need evergreen frameworks and best in class, what is going on in the ecosystem, what is working. And as a fund manager, best case scenario, you've been on the growth journey, you then exited your company, you've had a small breather, you started angel investing, and then you raised a fund. So you're anywhere between kind of like 5 to 12 years away from that pre-seed stage. So we've built a community of LPs and venture partners, all of whom are much closer to that pre-seed stage. And our job as a fund is to match the portfolio that we work for into our venture partner community and our LP community. So to double click on each of those sections, venture partner community, they are all CEOs and founders of fast growth success stories out of Australia. So the Mr. Yum founders, the Forage founders, the Linktree founders, the Ambience founders, the Eucalyptus founders, et cetera, et cetera. They are all Series A to Series C and kind of deeply remember what it was to be moving you through that pre-seed through to Series A. They see amazing deal flow, which they refer to us. They are supporting a lot of these companies anyway, so they're doing that through the fund. And they're also supporting these companies to be successful, meeting the right investors internationally. And so those referrals and intros to those investors come really, really warm. Also from the LP perspective, we have a couple of personas that we work with, later stage funds, both here and domestically, successful entrepreneurs and family offices from entrepreneurial backgrounds, both here and internationally. The founders and early teams did a lot of Australia's success stories. So some of the the companies I mentioned then, including Canva, Culture Amp, and a bunch of others. And then we have this group of kind of value add folks that everyone from podcasters through to lawyers, accountants that help with that flip up. So the goal here is we're trying to put together a bench of amazing people that are incentive aligned and excited about supporting the portfolio that we work for. So it's slightly different than some other syndicates in that it's not just kind of me as a jack of all trades. We actually have like quite a robust community and infrastructure built around these portfolios that we're trying to support. And the benefit of getting to invest alongside us in the syndicate is you get the benefit of that support to the portfolio companies. I would also flag here, one of my asks is to be part of this community is that you want to also give to the founders that are that next generation, ideally that next generation of unicorns coming out of Australia. And so it's a mutual opt-in, but would love you to participate if you're excited about also contributing, expertise, thoughts, everything that you can to accelerate that next generation.
Yeah. And I guess like on that note, like you've got so many people who are already supporting the fund, you've got the fund and your LPs and your venture partners, like, why bother with a syndicate? Why are you doing this? It seems like a lot of extra work, Maxine.
I think there's a couple of reasons. One, it anchors back on like why I'm doing the fund at all. I really want to see the Australian ecosystem like grow and thrive. And I think that that is a multifactorial opportunity. There are many, many different ways, all of us building infrastructure that needs to exist for us to continue to accelerate the Australian ecosystem. And so one driver is just a wider group of us that are supporting that amazing next generation of companies. There's a secondary element to that in that if I look back on the previous generation of success stories coming out of the Australian ecosystem, it was pretty heavily like the wealth creation was pretty heavily consolidated into a smaller group of people. If I think about the US ecosystem, every single time there is a successful IPO, there's 1,000 new millionaires minted in the Bay Area. I would love to see that dynamic operating in the Australian ecosystem, and part of that is expanding the number of people that get to participate in those success stories, and this is one of them. And then kind of driving back on why I started angel investing in the first place, I would really like to widen the perspectives of folks that are investing in the Australian ecosystem, and I'm really hopeful that this syndicate will be an on-ramp and a training ground for the next generation of investors for Australia.
Yeah. And you and me both, I think that's something that we both deeply care about is creating a lot of on-ramps for the next generation.
Yeah. Many on-ramps.
Many. So many. One of the things I think that we talk about all the time is like, it's all about the founders, and we like nothing works, nothing goes ahead if we don't buy into the founders, and especially at the pre-seed stage, like that's what you're investing into. So like, can you talk a bit more about like, what do you look for in founders? How do you know when like you've got a founder to back and when you don't?
Yeah, well, I mean, for pre-seed, as you mentioned, like you're investing in the chef, you're not investing in the dish necessarily. And so we spend a lot of time, firstly, on evaluating the market and the market dynamics, right? We need to get to conviction that there's a 100x return profile opportunity for us to write a check. And so to do that, there has to just be some macro dynamics in relation to the market that folks are chasing, where if we can get to conviction, if everything goes right, this could be huge. So that's where we spend our time to start off with. If we can get to conviction there, then we spend all of our time on diligencing the founding team. What we're asking ourselves there is, do we have a founder market fit, right? Is this team of people totally obsessed with this problem, deeply understand it? Do they, have an insight that's really compelling? And do they have the grit and growth mindset to go and chase it to a level of tenacity that looks like lunacy from the outside, candidly? Because that has been my experience. It's that level of pace and grittiness and your ability to like rapidly iterate and adapt your skill set if the founding team is going to make that growth trajectory alongside a huge success. My observation, with a kind of separate hat on, running CoLab, which is an executive coach matchmaking platform, and we've worked alongside some of the fastest growing executive teams and CEOs in the world, is the number of times and the pace at which these CEOs have to adjust their skill set from like cool idea to product market fit to scaled company to approaching listed market CEO. That the pace of change someone has to go through to navigate that, you really need to deeply believe in the growth mindset and be very, very capable of just pushing incredibly hard to navigate that journey. So we really look for those features to start off with, because I think it's very important that the CEOs are navigating that journey all the way up.
Yeah, wow. There's so many insights there. I mean, I think when we talk to founders, you need to have those conversations at the beginning, but really like it's an ongoing thing, and you're constantly evaluating that founder through that journey, which is something that I really love about how you work with founders in general. Well, you're running a fund, you're doing a syndicate. I think for us joining syndicates, it's all about deal flow. So how do you find great deal flow?
Yeah, I mean, our fund is structured to find the best deals internationally, where at least one of the founders are Australian. So we get a lot of deal flow from our venture partners. We get a lot of deal flow from our LPs, and we're constructed that way. I also get a lot of deal flow just because I've been an active angel investor both in Australia and elsewhere for a long time. And then increasingly, I think we have a first mover advantage here from a pre-seed market perspective. So we are, probably all of you have seen our brand building efforts to advocate for pre-seed and advocate for why consider pre-seed and how to think about it, etc. So that, both the most compelling founders in Australia, but also the most compelling founders internationally, find us and want to work with us at pre-seed. Some examples of that, recently we invested in a company called Flagship. They are a omni-channel retail insights platform founded by Simon Molnar, who was a early employee at Afterpay and Nick Molnar's brother, and they built ICE together, and their family is from retail. I actually met him through my American network because my American network knows I only invest in Australians, and it's a much easier matching exercise from Australian to Australian if you are in the US than if you are in Australia. And so I met him, and he actually at the time didn't know any Australian or a very small number of Australian VCs because of Afterpay's growth experience. So we meet a lot of people through kind of international networks. We meet a lot of people through our VP community. We see anywhere between 100 and 200 deals a month. We meet about 50 of them on average. So we have a very high volume sourcing funnel, which is one of the benefits that this, as a syndicate participant, you get to participate in. You don't have to build a multi-hundred company sourcing funnel and make your way through it, but still get to participate, in my opinion, the creme de la creme coming out of that funnel.
I like to call it angel investing light, because you don't have to do all of the hard parts of like deal sourcing and meeting with all of the founders where you're like 3 minutes in and you're like, shit. Yes, exactly. Yeah, you get the benefit of that. Although I would say, if you to accelerate that intention, that a lot of you become professional investors, you will have to do that at some point. You can't avoid the sourcing funnel. That is true. So what kind of deals do you think investors can expect from you? What are we going to see?
So you'll see a lot of pre-seed, slightly less seed, and even less Series A. We're expecting, so we are planning on doing about 10 a year pre-seed. Unfortunately, not all of them do we get follow-on or co-investment allocation for our LPs and in the syndicate. And for some of them, our LPs will take the full amount. So I think probably you'll see somewhere between kind of 5 to 8 pre-seed deals a year, and then follow on, assuming a certain level of kind of graduation rate from each stage, maybe one a quarter in terms of seed and Series A. That's our current prediction. We're ramping to run our first deal. Hopefully it will go live next week. So this is also a kind of experiment for us, right? Like, we're interested to see the volume and the appetite in terms of our ability to secure allocation and then offer it to these communities. So yeah, I think anywhere between 8 and 15 deals per year. So a fairly high volume syndicate.
What about like the types of deals? Like, do you have any themes around like B2B, SaaS, marketplaces, consumer stuff, or like anything and everything? What do you like?
Yeah, so we are generalists. We do everything. We do have some exclusions. We don't do hardware. We don't do biotech. We don't do kind of what we call regulatorily risky businesses. So things where there is a single license to get to market that's discretionarily given. So things like FDA, or if there are kind of single, market licenses that are given by government, we won't do those. And we don't do any deals where I would need a PhD to be able to assess them. In this current moment in history, specifically, those are things like foundational models. My perspective is that to effectively compete with OpenAI, you need to be the cutting edge researchers deeply plugged into generative AI, or if you're building other forms of AI. So we don't do foundational models, but we are doing quite a lot in the kind of application layer of LLM and generative AI stuff. But so those are our exclusions. Everything else we'll look at. The kind of flag I would raise here is that we plan to invest the next generation of successful Australian unicorns. To do that, my opinion is you need to have the widest funnel possible, because you have no idea where that category is going to come from. So there's no particular thesis we're investing. We're really looking for the kinds of founders chasing the kinds of ideas that have them chasing a really solid opportunity to generate billions or multi-billion-dollar enterprise value.
Yeah, I love that. I think it was someone once told me, like, well, if your category, like if you'd picked, oh, we invest in fintech, and you would have missed Canva. Like, unless you had said that, like, my category that I invest in is design software, then like you probably would have missed Canva. So I think industry agnostic for the next unicorn absolutely makes sense. What about requirements? Is there any, and we're going to open it up to questions in a minute, everyone. So I've allowed you to come off mute. Feel free to pop your hand up. We'll call on you. But just like, are there any requirements to join the syndicate? Minimum check sizes that you think you'll set?
Yeah, no requirements. Just the request that I mentioned at the top to please come to it from a place of wanting to contribute, feeling passionate about building the next stage of the ecosystem, both from a wealth creation perspective and an impact perspective. I think there are very few places in your career that you can hit both of those, and my hope is that angel investing will be one of them. So yes, no minimums, no commitments required. The only thing I will say is probably we'll set the minimums at 2,500 per deal. That's where I think it would make the most sense, but would love feedback from this community if that's going to price you out, or you think that's too high, you think that's too low, et cetera, et cetera.
Cool. Adam was just wondering if we could clarify the wholesale investor requirement. I can probably just address that. We do only work with wholesale investors for all syndicates on Aussie Angels, which just means that you need to qualify either as a sophisticated investor, a professional investor, or as an experienced investor. Adam, feel free to reach out if you need more information about those three options. We can go through them a bit more deeply for you.
There's an exciting opportunity on the experienced investor side as well through Aussie Angels, which I would flag when you reach out to Cheryl, ask for her thoughts there.
Yes. Cool. If anyone has any questions, this is your time to ask Maxine. Like I said, she is my favorite investor, and I learned so much from her. So I do want to give all of you a chance to ask your questions. Otherwise, like, I will continue, but I will keep an eye on hands. Maxine, exciting deals you have coming up. Can you share anything?
Give
us hints.
I can't give you specifics. But there is one dropping soon to our LPs, and then hopefully to this community if there is overflow in the influencer space. The founder has just blown me away. I think she is probably one of the fastest velocity operators I've seen come out of the Australian ecosystem. She has gone from no revenue to 1.2 million in booked ARR in 4 months. We invested in a pre-seed, so it's the seed stage deal, it's the follow-on deal, and one of Australia's major investors is leading the round. So hopefully that will be dropping in the next week or two. And then potentially another one coming down the pike, we are leaning in on to, we don't have a gender lens, these just happen to both all be led by women. We, as I was about to telegraph this one, another really exciting one, really seasoned operators who have deep experience in the US, relocating back to, or have relocated back to Australia.
My favorite kind of people.
Yeah, you were part of them staying. Not sure if you've met them, but you definitely were part of them staying. So they are building in the go-to-market efficiency space, and their product, their pre-seed, so it's very much idea stage, but if it hits, it would fundamentally change the way that any consumer, prosumer, or content-led go-to-market works. So very excited for that, and it seems to be coming in at a really attractive valuation. So we are in discussions with them, and if it works, hopefully we'll get allocation and you all will get to see it.
Yeah, awesome. Question from Vinco. Who else are you working with, and how do you make investment decisions that whether it makes it to the syndicate or not?
Yes. So I'm a solo GP, as Cheryl mentioned. I have a chief of staff, so it's a mighty team of 2. And our process is we invest 100 to 150K out of the fund. If we can get additional allocation above 150, so we try to take a full 150 as an investment. If we get about additional allocation above that, which we ask in every single one of our deals, we make that allocation available to our LPs on a first right refusal basis. They usually get an EOI in relation to it first, and then they get about a week to a week and a half to make a decision. So they have had a lot of time spending, to evaluate it, etc. Then if they decide to pull the trigger, they get the allocation. If they don't fully exhaust the allocation, then we would make the deal available to this group as well. And then, depending on how fast the deal is moving, you have probably a week to 2 to evaluate and then make a decision if you're in or not.
Awesome. Jim, did you have a question that you would like to ask Maxine? Feel free to come off mute.
Okay, cool. Jim Nickel here. No relation to Laura, by the way, just so everybody knows. But yeah, funny about that. So the question was, when it comes to sort of the fund's guardrails, when it comes to timelines to founders, from first pitch deck to a hard and quick no to like the first check. What does that look like timeline wise?
Yeah, so our process is fairly structured. That first filter. So first of all, I might actually start from the moment that they reach out to us. We try to get back to every single person that reaches out to us, even if they are a wide miss from our thesis. If we receive a deck and we say, yeah, we'd love to chat to you, we try to chat to them somewhere in the kind of 1 to 3 week mark, depending on how busy we are and where the intro has come from. From first conversation to yes, no, first gating item, takes us somewhere between 1 to 3 weeks. If we're really busy, we trend 3. If it's pretty clear to us that we're a no, we try to say to them on the phone. Something I orient quite closely on is if I've read the deck and it's clear to me they're not going to be a fit, or if there's like 1 or 2 questions that are threshold questions, which if they're no, then we're not a good fit for them. I try to do that on the call, and as soon as I can pivot back to either being helpful or let them on their way. But if we kind of lean in with doing diligence, that question that Cheryl asked me, kind of what is the first layer of evaluation we spend on that, like company, do we believe that there's $1 billion or multi-billion-dollar business to be built here? Once we get to conviction on that, we lean in on founder diligence. That process takes anywhere between 1 to 3 weeks. So we try to get them from first meeting to a check in 6 weeks. But we're kind of, there might be some variability on that, and depending on how long that founder diligence and how long their round dynamics take.
Awesome. Any other questions from anyone? Please feel free. Josh.
Yeah. Hey, Cheryl. Hey, Maxine. Firstly, just want to say that sounds really, really exciting, and I'm happy to be a part of it. If you just saw me with my phone out, it's because 2 birds have just landed on my windowsill. So
sweet.
I'll send the photo after. But my question, I know you mentioned that founder is super important to you. How would you sort of rank the other factors in terms of importance? So I guess market trends, size of market, competition, etc. When you're evaluating a deal.
Yeah, I mean, I think we have to believe, right, hand on heart, that if everything were to go right, this is a billion or multi-billion-dollar opportunity. So they are required, right? I think of our evaluation criteria as a handful of requirements, and then a whole bunch of elements that are, make it more probable that we will do the investment. And so we have to believe that there is a market size and market dynamics that could entertain a billion to multi-billion-dollar opportunity. We have to believe that the founders are gritty, growth oriented, and really deeply understand the problem to chase it. So those are all requirements that we have. In terms of weighting them, I would weight them all equally, right? They all have to be high yes for us to get to conviction to write an investment. So we probably actually haven't checked this conversion stat in the last couple of months, but I think we trend somewhere around the 0.5 to 0.3% between the companies that we see and the companies we invest in.
Awesome, super clear. Thanks.
Amazing. Thanks, Josh. Ellie?
Hey, thank you. Hey, Maxine, nice to see you. And
hey.
Lovely to meet the Aussie Angels team. Super excited. As a recently exited founder who's just moved to Australia and joining this investment community here, I'm just so incredibly excited to be part of it. I was wondering, Maxine, in your experience talking to founders in the US versus founders in Australia, have you noticed an ideological difference about exit and about different perspectives on the way that founders think about exit? I know that as an exited founder from the US, exit is what we want. It's what our investors want. We're all working towards it, whether that's a sale or an IPO, that's obviously the goal. Whereas here I've talked to some where they maybe feel like exit is a bit of a dirty word because it's meant to be your life's work. And the only kind of target is an IPO instead of an acquisition or an M&A exit. And I just wanted to know how have you noticed an ideological difference in founders here versus the US? And do you think that's shifting, if you have or not?
Such an interesting question. I'm reflecting on my conversations with founders and investors in the two ecosystems. I would say that there's probably a more nuanced relationship to the word exit in the US, because I think there's a deeper bench of folks that have exited. There's a full understanding that just exiting isn't the relevant bit, right? I have been part of a lot of conversations in the US, especially with investors, where the first question they ask an exited founder who's coming back to build again was okay, talk to me about that exit. Did your investors make any money? How did you behave during that exit? What, did you do your full vesting period? All of those kinds of questions. And so I have noticed a more kind of nuanced relationship with exiting. That's interesting that you mentioned it's in Australia, there's a kind of negative tone to it because it's supposed to be your life's work, whereas in the US, not necessarily. I've actually experienced the inverse in that I notice a lot of founders in Australia are building really compelling opportunities and asking them, is it your life's work? I don't actually get as many of them being this is the thing I was born and raised for and I will die for. It's kind of no, it's a really cool opportunity. I'm really engaged in it and I want it to be successful. Whereas I meet a lot more founders in the US that are when I was 3 years old, this thing happened to me in my life. And then since then, I have been like building this thing. And so that's really interesting. That just could be my data set, right? Like the two groups. I will say that the exit dynamics in the US versus Australia, like I know a lot more founders in the US that are building for acquisition and investors that love investing for acquisition, and not as many in Australia. There are a lot of funds in Australia that construct their portfolio for no zeros. So it's implied in their structure that they will always be selling anything that's not the like fund returners. But they don't talk about like what that means for being on the company side of that, right? Like there are some companies where for founders, in my opinion, it would be much nicer to just be like, cool, that didn't work. Let's put a bow in that and move on with our lives, as opposed to be stuck doing a 4-year vest at a company you hate. Super interesting.
Sorry, I was muted. Yeah, that makes total sense. Interesting. We have different. I mean, I think it's just the nature of obviously also the different industries, depending on like, I was in hardware and consumer. It's like, but yeah, I think it is interesting knowing that the exit dynamics are going to be different, but that was a great answer. Thank you.
Thank you. Really great Thanks question.
For the question. Vadim.
Oh, are you on mute?
Sorry, just trying to juggle a few things. Maxine, hey, how are you? Good to see you.
Good, how you doing? Nice to see you.
Good. Got this sleeping. One of the questions, obviously, with our syndicate, we also focus on early stage stuff. And as you know, one of the best sort of things we can do for other investors is to kind of signal. I think you hinted at that before around not signaling for later stages. Are you comfortable or uncomfortable about us kind of sharing stuff that we're seeing with yourselves?
Oh, absolutely. Yeah. I mean, I think Australia invest 1/17 into the ecosystem that the US does. So like not even into the ecosystem, just like directly into companies. We have a big gap that we need to close. And that is controlled for GDP. So it's not like America's richer, so invest more. Like that's not the dynamic. We just invest less into startups. And so there is a big gap that we need to close. And I think it will take all of us doing like good work, clever work, and lots of it to close that gap in our lifetime. And so collaboration is king here. I think any opportunity to share deal flow, share notes to the extent that we can. Obviously, there's confidential information that's moving around here, so we have to be careful of that. But yes, I am a huge believer in collaboration, and so would love to share stuff. And that is an open invitation for everyone else on this call as well. Especially, there's probably a lot of folks on this call that are at the earlier journey than Vadim, you and I are at, which is those like first companies you're meeting, which is like, I'm excited, but is this good? I don't know. Sharing it with us, happy to give feedback on companies, happy to share, why we passed, why we didn't. I think the other thing to say, which is kind of an open, uncomfortable secret when we talk about early stage investing, is there's a lot of opinion in this and less facts than I think makes a lot of folks comfortable. And so there are it is why it is so important that there is a wide diversity of people deploying capital and meaningfully deploying capital into this ecosystem. Because if there is just one homogenous view and it is mainly opinion, then it largely predicates that there is one homogenous demographic or kind of company that gets invested in. And if we look at more mature ecosystems, it's actually a wider group of people building a wider group of companies that these opportunities, category defining companies are built. And so just because I don't see the opportunity does not mean the opportunity does not exist, right? And same thing for Vadim, and same thing for the Blackbird team and the Airtree team, etc. Like this is why it's so important there's a wider bench of people deploying capital, so that more founders are backed on the basis of merit and given an opportunity to prove that it's possible. Because remember, we're funding, nothing through to early potential indications that it's working. And then even like, oh, it's kind of working. Oh, can we actually build a company around this? Like we're talking about early stage building. Yeah.
Thank you so much.
Yeah, happy to. I think I saw, Vinko, you put a question in the chat. I am atrocious at multitasking. So
I can read it out.
Oh yeah, okay.
If we have,
I'll go silent and very sullen while I read.
If we have founders/startups deals that we think you might like, what's the best way to refer these to you?
Please just send me an email. And I suppose I should put my email on our syndicate page. That would be a smart thing to do. But yes, oh yeah, there we go.
Google scrapes those, so maybe don't put it directly on there.
Okay.
But yeah,
Laura has just put it in the chat. So please just send me an email, attach any materials that you have. If you are excited about it and you want feedback on like why, I would lean in or not, yeah, feel free to let me know and I'd be happy to write some bullet points.
And Wyoming, question, what tech stack do you use as a solo GP, or what tech stack do you wish existed to help you with scaling?
Our tech stack on the operational side, I assume, is what you're interested in. It is G Suite, Airtable, Superhuman, a little bit of Zapier, Loom, Fathom. I think that's it.
Like piecemeal.
And there are a couple of things that we are experimenting adding to that. But that's the tech stack we use today.
Amazing. I think we are at the end of our questions. If I just, actually, Alex had a question. Does the overflow for Co Ventures Community Syndicate get allocated on a first come, first served basis post the LP syndicate allocation, or does it end up being pro rata?
Great question. I think we will do it on a first come, first served basis. I don't want to be in the position where we are like picking and choosing who gets to come in. So like we will tell you how much is left, I think. And then it's first in, come, first serve. Yeah.
Awesome.
Great question, Alex.
Amazing. We are at the end of our chat. So if no one else has any questions, you know how to reach Maxine. Her email is in the chat, and you can always just reach out to us and ask again. The link to join the syndicate is also in the chat. It's also in the invite today. And if you can't find that, it is also in the Aussie Angels directory, along with a whole bunch of other awesome syndicates. So hopefully this has been fun and educational for you. And Maxine, thanks you so much for your time today.
Thank you so much for joining, and great to see you all. Thanks for giving us your morning. See you soon.
Bye, everyone.
Thanks, guys. Bye.